before you entered any trade. And also, I can see that you are trying to maybe um, trying to trade like the way I do trade. Maybe have, if I take five trade, one can be possible a loss trade, or I can win all the trade. So I guess maybe that is what you really want to know about me. Okay, so one thing is that let me just go straight to the point instead of wasting our time to talk. One thing is that anytime I trade, I always
Person wey water see me when you swallow. See me the
Please, can
water.
you record it?
yes, I'm
No, no,
recording
yeah.
it. So
Thank you.
so one thing before when I open a chart and before I even enter a trade, there's something that always come to my mind. If you observe my video very well, and if you observe, okay, don't worry, there's a trade I will upload on YouTube today. Maybe after this class, I will upload it on YouTube. The trade about the some of the trade I took, all this trade I took in binary option, and the trade that we took in forex. If you observe very well, that you see that most of my trade in forex and binary option, both trade both platform, anytime I took a trade, either in binary or forex, they have the same analysis. They have the same analysis. The way I see forex is the way I see binary option. So there's nothing I'm looking for. The way I analyze the binary option is the same way I analyze the forex. It's just that this psychology behind binary option is quite different from the one of forex. The psychology in terms of you taking a single candle trade is quite different from the one you only predict the trend. In binary option, you predict trend. In binary option, you predict next candle, and in forex, you predict trend. I make some video today about the forex analysis that we had in the VIP group, and also the binary option and the trade I took. So maybe after this class, I will upload it on YouTube. So one thing is that the way I look at the chart is the same way I look at the chart in forex. If you observe what is happening here, if you observe what is happening here, this the same way I usually observe what is happening in the forex market. I'm looking at head and shoulder pattern, head and shoulder pattern. That is why most people always think when they open the chart, they start drawing levels. Well, like I always tell my students, before you do anything, before you take any trade, you must know the structure of the market. First, analyze the structure of the market. The structure of the market here looks like inverse head and shoulder pattern. Inverse head and shoulder pattern. Here we have the left shoulder, the head, and the right shoulder. Here we have the neckline, and here we see the breakout. Now the price came back again to retest. That means if I should trade in this kind of situation, this is the area I'll be looking for a call option. So that means my psychology about this trading is that I'm not after predicting trend to reverse to the upside. I'm after predicting what will be the next candle once the price approach this level. In forex, I'll be after predicting what will be the next candle. What will be the next trend? Will the market go up or will the market go down? That is what I'll be thinking. But the way I see it, the way the market presents itself to me is the same way I always see in forex. That is why if I trade on forex, the same mind I use in trading in binary option. There's nothing else. I didn't have any secret. Here I'm seeing the head and shoulder pattern. We have the left shoulder, the head and the right shoulder. This is the neckline. This is the breakout. This is the retest. Now the retest, I'll be looking for it on the left side. I will draw a zone whereby once the price comes to that zone, I'll place call option just for 1 minute expiry time or any minute expiry time you are trading on. Okay, so that one is quite different from the one you predict the next trend. Now, again, as you can see again, have the market move to the upside and downside. The market move to the upside and downside. Now, the way I do trade on forex is that I will take this as a Quasimodo pattern, which is this is our resistance. Then I will simply a horizontal line, draw a resistance area, horizontal line. That means once the price comes to that horizontal line, I'll be looking for a put or a put option or placing a lower trade, because the way I see the pattern, it presents itself to me the way I always see it in forex, which is in forex, if this is going to be your left shoulder, this should be your right shoulder. This should be your head, while this should be the neckline. So, which means if sellers is going to enter at this area, we are expecting a downtrend, right? But a confirmation will occur here for you to enter the trade. If not, you will see the market start going up, or you don't know where the next market direction. But in binary option, you want to predict one single candle. So you have to do it that way. Then not only this pattern I always see in forex. This is not the only pattern we have in forex. We have the Quasimodo pattern. We have the break of structure pattern. We have um, the triple top, double top pattern. We have the channel breakout and retest. Okay, so we have so many patterns that you can mention in forex. That means I'm saying this, that in case you want to enter a trade in binary option, you must bring the knowledge of forex into this. I'm not saying you should trade the way you trade on forex, but bring the knowledge of forex. Bringing the knowledge of forex is how you identify the structure of the market, how you quickly grasp the structure of the market. Most of the time, you see that I will open the chart, I will start drawing levels, something like that, and the next thing you see me open a trade. The next thing you see me that I open a trade, because I have already know what pattern is going to form. I'm aware, or I know this kind of pattern usually form in forex, and I know the direction anytime I trade in this pattern. So which means I'm expecting the same thing to happen in binary. Okay, so not only that, and again you can see that also we also have this kind of pattern in forex, right? Low highs and lower low structure, whereby this is going to be a resistance, and this is going to be a support. Okay, resistance support from lower highs, lower low, lower high, lower low. So which means once the price comes to this level, you go with sellers. Once the price comes to this level, you go with buyers. Okay. So once you can do this, there's no need for you to be tracking your brain, thinking something else or what is going to happen. You have already know this kind of pattern usually from the forex. So that is why anytime I took a trade, there's no need for me to think deeply. There's no need for me to analyze deeply. I'll just analyze simple and take the trade. And before you know, I won the trade. Let's assume that this is a resistance, right? Let's assume this is a resistance. Okay. So this is class. Let me use one per trade. Okay. Now you see that there's a gap. There's a gap, but actually I'm still going with sellers. Why? Because like I said, the way you think in forex is the same way you should think in binary option. This is a downtrend, down move. The market is forming lower highs and lower low. Lower highs, this is the lower highs, this is the lower low. This is lower highs, this is lower low. So as the market is forming low highs and lower low, it's creating a resistance, which means there are some resistance around this area. And here there are some support around this area. So which means if you take a trade around this resistance area, the market should reverse, right? If you take a trade around this support area, the market should reverse. Now, if the market doesn't reverse, this is how the market is going to form. This is how the market is going to form. The market doesn't reverse, it's going to break, come back to that same area which I've drawn, then you place your trade. So which means from lower high structure now form higher high structure. You can see that this pattern look like inverse head and shoulder pattern. Okay, so what you have to do is wait for the candle to come close to this level, then you place your trade. Now you see that the market did not reverse it's because of the pattern it's going to form. That is why whenever we took a trade, the market always go against us because it's not going to respect the pattern all the time. So what you have to do is wait for the price to come close to this level, then place our trade. Look, you see like you can see that it look like inverse head and shoulder pattern. Here we have the left shoulder, the right shoulder, and the head. So this is a break of structure. So wait for the price to come close to this level, this zone particularly, then go with buyers. Wait. You see that this candle, look at this candle, look at this candle. This is the zone I was talking about. But look at where this candle close. It's get close to this level and got rejection. And as it got rejection, it didn't close inside this zone, it only got rejection. So that means we are going with seller. But see that the market still gap. There's a gap up. This gap indicating a strong buying pressure. That if this is a level and the candle closed near the level, the candle is supposed to reverse immediately. But the market just gap, something like this. That gap indicates a selling pressure. It's selling pressure because this looks like a resistance. That gap indicates some selling pressure. That means the market is going to form a red candle in that kind of situation. Here it formed a green candle because of some buying pressure from this zone. Some buying pressure from this zone. Now you see that the market doesn't want to go too far. You have to wait for the again. See the market is trying to come down again the second time. Probably if this candle here will close inside this zone, that is when you can enter the trade. So let's see, let's watch and see. Okay, see that it's getting close, closer, closer, more closer. This green candle that we are seeing here tells us that the buyers are here. Okay, it's telling us that the buyers are here. So I'll go with buyers. Okay, I go with buyers. You can see that again, immediately the candle close inside the zone, there's a quick buying entry, quick buying pressure. Like the buyers quickly enter the market. That is why my entry was triggered here. The buyers quickly enter the market. So immediately the buyers quickly enter the market, it's telling us that there's a strong buying pressure around this zone. Before it was sellers entry, sellers zone. But this time, no sellers. You remember the first trade I took, I go with sellers but no sign of sellers. Instead of sellers entry, buyers entered. Now when the buyers entered, sellers can again come back to that same zone. There's a strong buying pressure for buyers to enter the market. Okay, that was a late entry. That was a late entry because of the strong buying pressure. So what do you going to do on the next candle? Think, that we still have about 16 seconds for this candle to close. So think fast. What will you do about the next candle? What will be the next candle? Remember, this zone is still a buyer's entry zone. This zone is still a buyer's entry zone. This candle stop at the zone buyers entered with this strong buying pressure. This strong buying pressure indicating that the market should go up. So as I was analyzing the chart, the way I'm seeing is that maybe the market should go. up like this. Okay, that is what I'm looking at the chart. That is how I'm looking at the chart. Maybe the market should go up like this. So now this candle form, the next candle form, and it's still at this area. Still at this area. So what will be the next candle? I will go with buyers. Okay. Now, one thing you should know that don't trade like um how should I call it? Like this is a zone, candle cross the zone. Let us go with sellers. Or this is a zone, candle cross the zone. Let us go with buyers. Trade like something. Let's say for example, this is a zone, right? This line I have drawn, these two lines that I've drawn is a zone. Like supposed to be a seller zone, but no sign of sellers here. Buyer center. Now it's a buyer zone. But I didn't take that these two lines alone as a zone. If mark like if you observe very well when you are trading forex, like if you have a supply and demand zone, when the market come to that zone, it will cross the level before it reverse, right? Okay, most of the time when the price come to that zone, it will come to the level, they create a shadow. Once they create a shadow, it now reverse. So there's no difference between two of them. Both of them are the same. The price crossed the level and reverse. Here only show the shadow, which means this candle, this by the time the price crossed the level with the body and close above it, we are still seeing either like two or three candles above the zone, but the market still reverse. If you go to a higher time frame, it's going to be a shadow. It's going to be a shadow. This is going to be like two or three candles above the zone. That is exactly what is happening here. These candles that you are seeing here below the zone is a shadow. If you go to 5 minutes, let's check that on 5 minutes. You see, it's a shadow. You can see that it is a shadow, like a weak, a rejection on 5 minute chart. But when we switch to, let's check for 2 minutes. 2 minutes is like two candles. But when we switch to 1 minute, it's like three candles. We are seeing three candles. The candle cross below and the buyer still enter. Why the buyer will still enter after the candle cross below? It means that both these four candles or three candles, it like a shadow on 5 minute chart, like using a 5 minute chart like a high time frame, it's like a shadow. So that is why I make use of all these candles to be exactly at the zone. Look at this line I've drawn. If you check on 5 minutes, you see how it works. See that the candle, the first line is here, second line is here. Okay, first line is here, second line is here. So which means on 1 minute it's still the same. So it's like a shadow. Now, when the price go up, the buyers become weak. Take note. This candle cannot continue. So buyers become weak. Now sellers enter. When sellers entered, will the price go down or up? For me, I will go with sellers. Why? Because the situation that happened here is quite different from what is happening here. The situation that happened here tell us that buyers are weak, sellers are strong, and close below the zone. Definitely, sellers must continue to the downside. Here, the situation that is happening here is because when there's no sign of sellers here, I think something is wrong with the currency. When there's no sign of sellers here, the buyers break the sorry. When there's no sign of sellers here, the buyers continue. Now sellers came back. When sellers came back and buyers entered, sellers again still came back. Though this candle closed below the zone, buyers will still enter because the situation here is that there's no sign of sellers, which means buyers must enter here. But here, the situation here is that the buyers are very weak. This bullish candle is very weak. Look at the body. Compare the body to the previous one. It's very weak. So, and the sellers cross the zone, which means that indicates a strong selling pressure. Okay, you see the pressure from sellers. Okay, a strong selling pressure. So in that case, the sellers will enter on the next candle. Buyers will not enter, not like this. So when you are trading, think about the sellers, think about the buyers, think about what has happened in the past, what has happened to the previous candles, think about what is going to happen to the current candle. Now, okay, I think let me check another currency. Let us not waste our time on this. Okay, so here, you know, I want to analyze the chart now. I open the chart, this is what I see, and I want to analyze the chart. I will bring I will bring what I usually do when I'm trading forex, like observing the structure of the market. If you observe the structure of the market, this is how it look like. Okay, but if you draw it properly, this is how it's going to look like. Connect all the lows and connect all the highs. So what does it look like? It look like triangle pattern. Triangle pattern. Now, in a triangle pattern, where do you think the market always reverse? The market always reverse at the edge of the line, at the edge of the line, which means if the market is in the middle, shouldn't take any trade. Okay, the market always reverse at the edge of the line. So when I'm trading in this kind of situation, this is what I'm going to do. I'm going to draw a support and resistance trend line. Okay, so now I draw this resistance trend line in expecting the price to reach reach the line the third time before I open the trade. Now, for me to back up my plan and to know if this level is going to reverse the market, I need to check on the left side, like draw a zone. You know, in forex, we usually draw a trend line, something like this, and also we draw a zone. A zone is to know where the market will reverse. Okay, so if I should draw a zone, um, okay, very fast. I wanted to do with seller, but it's too fast. If I should draw a zone, this is how it's going to look like. Okay, this is how it's going to look like. A zone which I've drawn, this is how it's going to look like. Reverse, 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 reverse. Definitely a weak candle also reverse. Okay, so analyze the market the way it presents itself to you. Not for me to be not for me to start drawing horizontal line, something like this, something like this. This is our resistance, waiting for the price to come to the resistance, where I know that the market is at this demand zone. This is the other block. It's just like drop base rally, and sorry, drop base drop. If you understand forex very well, there's something we call the supply and demand. The drop base drop and rally base drop, rally base rally, drop base rally, something like that. Here it will look like drop base drop. This base is our supply. This base, we call it the other block, so it's our supply zone. Now, this candle got rejection from the supply zone. It's very strong because the first candle is weak, the second one is strong. So we are expecting a strong candle for us to continue. But what happened? The buyers become weak on the next candle. So from weak to strong, now from strong to weak, that indicates a trend change. So from this zone, where the candle close, which means sellers will enter on the next candle. So that is why we see some sellers entry. What? I made a mistake here. I was using $20 instead of $1. Come on. This. If I lost the trade, I lost the whole $20. Come on, let me change all the currency to $1. This is not live section. This is just explanation. Okay, so now let's assume you open the chart. The market has already crossed this trend line. Where do you think what do you going to do next? In forex, once the price break the trend line, we always wait for, like the observative trader, they wait for retests, right, and trade in a continuation pattern. But the aggressive trader, they will trade right away after the breakout. Those are the two type of traders that usually trade breakouts. The one that will trade break and retest, and the other one that will trade the aggressively. Like that, once the price break out, they will just do the trade sharp, sharp, no time wasting. So, um, once they enter the trade, now how do you want to trade in this kind of situation? Do you want to become the aggressive trader, or you want to become the conservative trader? Like me, if you are to become the aggressive trader, you look for a zone. This is a breakout, then you look for a zone. Look at on the left side, we have reversal around this area. Reversal around this area. So many reversal. Okay. So what we are expecting is the wait for the price to come to this zone and you place your trade, because already we have this structure intact. Continuation of the downtrend. Okay. But if you want to trade like the aggressive trader, you have to observe the candle that even break the zone. What type of candle is it? Look at this candle that break the zone. Look at this candle that break the zone. Very strong candle. And the second one is a weak candle. Okay, I think I made mistake here. I'm supposed to go with sellers. The second one is a weak candle. Weak candle below. Weak candle after breaking a level, breaking support and resistance is always a continuation sign. Okay, weak candle at the support and resistance. Like if this is a resistance, if this is a support, then you see a weak candle at the resistance, it will reverse the market. Okay, or if you see a weak candle at the support, to reverse the market. But if you see a weak candle after the breakout, a weak candle after the breakout, it continue the market. A weak candle below the support, weak candle below the support, it also continue the market. So like this, weak candle below this breakout, it will continue the market at least for 1 minute, at least for 1 minute. Okay, I wanted to go with sellers, but I mistakenly go with buyers. But anyway, I still want the trade. So now, what do you want to do next? You wait. Already, we are now having what we call the support zone. Now we can now remove this trend line and draw a support zone. Here we have the support, and also we have the support here. Look at this on the left side, the market reverse, market reverse, market reverse. Very small green candle. So it's not enough. That is why sellers enter. So if I should go sellers, it will be too late. Okay. Now, one thing you should know that if this candle close within this area, the market should reverse. If this candle close below, okay, let me do it this way. Let me draw the line. Okay. If this candle close below, it should go more down. If the candle close below, it should go more down. If it close within this area, it should reverse. So I think it closed below. So it should go more down. It should go more down because first, this is our support zone, right? And the from the support zone, a weak buyer's entry, telling us that there's not enough buyers around this area. And this candle, next small candle was a seller's candle. Now seller's candle has already break the support zone, showing a sign of continuing the market to the downside. So now the market has break the support zone, which means the seller should enter on the next candle. Okay. So now Okay, it seems that buyers are trying to enter the market. Now, one thing about this kind of analysis is that there's what we call consolidation. There's what we call consolidation, that even if the price break a resistance area, the market consolidates for a while before continue to the upside or before it reverse. Okay, so it depends on where the market want to force in after the consolidation. Consolidation is when the market is preparing where it should go. Okay, but here it looks like consolidation. Consolidation is when we have the green, red, green. So red, green pattern at this support area is telling us where the market should go next. So let's wait and see what this candle will do. Because during the consolidation time, it's not safe to open the trade. Wait for the candle to wait for the market to stop consolidating, then you open your trade. Okay, now this candle close. This candle after this consolidation, red, green, red, green pattern. The next candle was red. What the next candle was green, and after the candle now close above, look on the left side. Always check on the left side. Look at this bearish momentum. One, look at this huge rejection, the selling pressure. Then look at weak buyers entry around this area. This tells us that from this weak shadow to this, where the buyers are weak, to this is more like a zone. It's more like a zone. Now this candle now close exactly at the zone. From this week to this candle close before this week candle. So it's more like a zone. This candle now closes at the zone. So what are we expecting sellers entry? Now look at it very well. Should you go with buyers or go with sellers? Remember what happened here. This. Remember what happened here. Should we go with buyers or go with sellers? Okay. For me, I will go with buyers. Look at this one. I think I go with sellers here, but this I go with buyers. Why? Because this candle doesn't look like a weak candle to me, and it's still part of this consolidation that is still occurring at this support level. Okay, so I can't just say the market has stopped consolidating. Let me go with sellers. No, the market really break the zone, but I can't just decide to go with sellers because the market is still consolidating, which means even after this green candle, even after this green candle, seller will still enter again. Because if you check on the left side, a seller's candle form here, another seller's candle form here. Okay, okay, not at the right point. This is what I'm expecting. Seller's candle form here. After this green, seller's candle form. After this green, seller's candle form. So this is more like a seller zone, which means you have to wait for the candle to close inside the zone, then you go with sellers. Confident. So right now, I'm not going with sellers. I'm going with buyers. Oh, the time expired. So I'm going with buyers. Okay. Now let's see how this candle will close. Okay. Okay. Strong candle, and this candle, if this candle will close as weak green, should go with sellers. Come on, we need a green candle, not red. Okay, it closed as red. Can you go with sellers again on the next candle or go with buyers again on the next candle? Remember, the buyers are here. The buyers are here. Okay, I will go with sellers because the buyers are around this area. This is buyers area. Why this is sellers area? So the candle is near to the sellers area and the buyers area is still far. So I'm expecting like some sellers movement to the buyers area. So that is why we still go with sellers on the next candle. See, the buyers are trying so hard to form a green candle, but they still got rejection from the zone. While the buyers are really waiting here. The buyers are waiting here. Okay, very weak buyer's entry because of this rejection. I think that is why I won the trade. Okay, weak buyer's entry. Okay, let me find out the reason why buyers enter here. Okay, because of this candle, so buyers entered. But the market should continue. The market must reach this level before buyers enter. That is my expectation on this trade. So after this green candle, buyers are weak. Really, buyers are weak, and now this is the buyers area. Okay, so now I'm expecting some buyers entry after this candle because this is buyers area. Bullish candle, bullish candle. So we call it the buyers area. Come on. Okay, the reason why I go with sellers is because this is buyers area. The candle got rejection from the buyers area and close above the buyers area. So which is there's still a gap to the buyers area and the candle close here. I'm expecting one more bearish candle to fill the gap before buyers enter. Now, you know that I'm expecting one more bearish candle to fill the gap before buyers enter. Wait for this candle to close. Even though the candle closed below this zone, buyers will still enter because we just want the candle to fill the gap before we expect buyers entry. Okay, I think buyers entered again after touching the zone. Okay, same thing that happened here after touching the zone. After touching the zone, seller center. After touching the zone, buyer center. So it seems the market here is not good. Okay, if the market is doing like this, always avoid this type of market. You have a resistance, you have a support. Now the market is supposed to reach the zone, the resistance zone before it reverse, but it touches the resistance zone and form a red. Same thing here, supposed to reach the support zone before it reverse, but touch the support zone and before it turn to green. That indicates some strong buying and selling pressure. So it's not safe to continue trading in that kind of situation. Me, when this happened to me, if this happened to me twice, I will just stop trading at the moment. I just stop trading at the moment. The market is still forming green, red pattern. Still the consolidation mode. Green, red pattern. So let's check Ethereum. Okay, Ethereum is in a downtrend whereby we have the sellers here, sellers, sellers. So which means if I should draw sellers line, it should be something like this. What of the buyers? Buyers, buyers, buyers. Buyers is going to be the horizontal line, something like this. Is this digital? Almost. Okay. Sellers, 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 sellers. Buyers, 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 buyers. Because this is buyers entry, buyers entry, buyers entry. Sellers entry, sellers entry, sellers entry. So let's see what the market is going to do on the next candle. This candle close below the buyers entry. So you can't know, you don't know if the market is going to reverse or not. Okay. Okay, so now we wait for this candle. Very strong momentum of sellers. It's no opportunity. Green red. It's no opportunity here. Okay, very simple candle here. Very small red candle indicating um, demand zone. Supposed to work here, but didn't work. And this candle close. Okay, I think it should go down. Okay, up. Okay, up. Because this is demand zone. That is the other block. That is why we see some bullish candles here. So, and again, instead of going up, sellers entered because of this downtrend, and again got rejection from that zone. So I think the next candle here should be bullish. So let's see. Okay, almost form a bullish candle. Almost form a bullish candle, no bullish candle. Almost form a bullish candle, no bullish candle. That indicates no sign of buyers here. So once sellers break the level, become a resistance. So that is one thing about trading. So no one is sure about the level that should be respected and the level that should not be respected. Already it has been respected here, but the sellers still entered again the second time very strongly. Now it's indicating that no sign of buyers here. The first candle, no sign of buyers. So now we see after the second candle, we see some buyers entry. Okay, so we see some buyers entry, and exactly from this area now, that means the buyers now are now interested. Before the buyers are not interested here, the buyers now are not interested here. Strong selling pressure. See strong selling pressure. So when the market is creating this strong selling pressure, it's telling us that the sellers are very strong just to continue this momentum or this trend to the downside. Because this trend here is showing a lower highs and lower low structure. Okay. So strong selling pressure telling us that price will still go more down. But here it's now at this demand zone, whereby it look like a Quasimodo pattern. You know what we mean by Quasimodo pattern? Just like after this down trend and up, here the market reverse. Here it create the lower low. This is low. This is high. Lower low. So the market now goes up and got rejection from this level, same level. So buy center. So the buys now have crossed this high. So it's now higher high. Okay. So which means you can expect again the price to come again to that same level, then you go buyers. From here the buyers will enter very strongly. You will see momentum like they almost like say this one is forming one, two, at least I'm expecting three more bullish candles. Three more bullish candles. Because the price touches the zone here. Okay, after um creating the lower low. So I'm expecting that is when the momentum will continue. Except the momentum will be a very strong candle. If the candle is not that strong, you will see up to five candles. But here I'm seeing a strong bullish candles. I think it's going to form one more green. It's going to form one more green. And How do you want to enter the trade? When are you expecting seller's entry? We are expecting seller's entry around this area. Okay, we are expecting seller's entry around this area. So instead of small candle, small green candle, it formed a too strong candle after the zone, after rejected from the zone. Too strong candle. So at least if this is small candle, it should be five candles or six or four. But it formed two strong candles. I think the next candle here should be small green. So let's see. The body size should not be the same as the previous candles. So that's why I say it should be small green. You can see very small green. And when you are seeing small green after two strong candles, it's indicating some trend change. So for you to now know if sellers will enter the next candle, check on the left side. Do you find any sellers area? Yes, this sellers area, this sellers area, reversal area, sellers area, reversal area. So you draw it like this. So buyers become weak, definitely it's a chance that sellers should enter the market. If this is a real trade, I shouldn't be placing a wrong trade or placing a wrong entry. This one I'm just using it to explain. Okay, since there's no sign of sellers, bullish momentum, um, where again should we expect sellers entry? I think the market will continue until they reach this level. Until they reach this level. I think that is where the market is heading to. Even seeing weak candles, still continue the market. So let's see. But now I'm expecting one strong green candle. One strong green candle. Very weak candle. In the middle of the trend. Very weak candle in the middle of the trend. A continuation sign. Because this is where the market is heading to. This is where, starting from this, I know the buyers will enter like a momentum starting from this level. So the market will continue. They will look for next seller zone before they start reversing. And before the market should just reverse, it should get close to the level and reverse. So most trader will think maybe it has touched the zone. It has not touched the zone. It's just testing if it's because this is the zone. Actually, this is the zone. The market will just stop at a certain point without reaching the zone and reverse. And then the next one will just continue and touch the zone before finally drop. That's what the market always do most of the time. I have studied the market movements. I have known that is how the market behaves. Maybe that is really is what is happening here. This is the level they are heading to. This is the level they are heading to, and that is why the market is stopping at this area. So the market will stop like twice or once. Most of the time, it's always a one candle, then continue. Once they continue, they will now drop to the downside, and maybe that is what is happening here. So after this, I'll stop for today's section. Maybe if you have any time tomorrow, we'll still do that tomorrow. Oh shit. This one. Very very weak candle again. So maybe I should stop here. Okay, maybe I should stop here because it seems the market is forming weak candles. Weak candles. It seems the very getting bad now. Okay, maybe tomorrow we still continue. So maybe tonight I will upload the video. I will share it. I will share the video to you.
Okay, this one and the other first one, please send them to me. Thank you.
All right. All right. I'll send it.
Thanks for your time.
All right.